A new milestone for NIO today is starting to trade at the Singapore Stock Exchange. So for NIO, this is a way of diversifying their investor base and also counter a little bit those delisting risks. To be clear about that, of course, the delisting risk is still there, but you can now also trade shares of NIO in Hong Kong and in Singapore in case of a delisting. The shares are fully fungible. And on top of that is, of course, also the effort of going global.
Blue sky coming.
I certainly hope to see a lot of NIO cars on the roads in Singapore very, very soon.
很高兴与大家一起见证未来在新加坡交易所挂牌上市。用户的支持与信任一直是未来前进的动力。未来已来，让我们一起加电，继续前行。
And the cool thing is we also got some new insights with the CNBC interview with Li Bin, who is still in lockdown in Shanghai as it seems recorded at his home.
NIO, the Hong Kong listed shares of NIO up 8%, similar gains coming through from the Singapore listed shares as well as listing by way of introduction. So what that means is no new shares being issued and no funds being raised. And this comes just 2 months after the company listed here in Hong Kong. We talked about the delisting risk with William Li. We also heard about, of course, the impact and what they're planning to do with this listing. But then locally in China, because of that COVID containment, no cars were sold in April across Shanghai. We had China car sales slumping. So I asked him about that, how to quantify the impact of the COVID lockdown on their production and on their sales. This is what he had to say.
这个疫情对全球的汽车产业都有非常大的影响。
The pandemic is having a huge impact on the global auto industry, and not just in China. In April, because of the spread of COVID, we have indeed seen China's car production and sales on the decline. In April, we managed to deliver more than 5,000 cars. Between January and April, we delivered over 30,000 cars. Looking at the overall industry, EV sales in China grew 134% in the first quarter of this year. Even in April, we are seeing all-electric car sales increase by more than 46%. The growth is still pretty strong. Right now, the virus is getting under control in Shanghai and in other areas of China. Production is on the way of recovery. We believe the slump is merely temporary.
In recent months, EV players have raised prices and are dealing with supply chain disruptions due to the Ukraine war. Are you pressed to pass on higher costs to your customers?
The price increase in raw materials, especially metals and battery materials, is putting significant cost pressure on the entire electric vehicle industry. Of course, the increase in oil prices is somewhat offsetting the impact on electric cars. In terms of overall competitiveness, I think we are in pretty good shape. Of course, we have already hiked prices of our cars. Most of our models are more than 10,000 yuan more expensive. This will help cushion the blow of our bottom line and mitigate the pressure coming from cost increases. Globally, the inflation pressure, the cost pressure is quite big, not just to the auto industry, but to the entire supply chain globally. We hope governments across the world can take some measures and work on improving supply chains and logistics. At NIO, we are working on our industrial supply chain to lower or control costs. We have seen some progress on that front.
We are looking over at the Hong Kong market. Shares of NIO in focus here as we've got a new listing in Singapore. This is the first Chinese EV maker to be triple listed. This is over in the United States with their primary listing here in Hong Kong. They listed by way of introduction in March, and then today in Singapore also by way of introduction. What that means is no new funds raised, no new shares being issued. So it starts at $16.66 US, which is the US close last night. overnight. This is just coming days before the quarterly results are due. The Singapore shares fully fungible with their U.S. ADSs. I got a chance to ask William Li, the company's CEO, in a first on CNBC interview, you know what, you just listed in Hong Kong. Why the Singapore listing? This is what he had to say.
Today is a milestone for us. We went public on the New York Stock Exchange in 2018, listed in Hong Kong 2 months ago, and today we are listing on the Singapore Exchange. The SGX listing will enable us to serve more investors, and it is a key step forward in our global expansion.
We'll have lots more with William Li. I got to talk to him about the delisting risk over the United States, inflation issues, supply chain. So lots more coming up on the rest of the show.
And I think from the whole interview, this is the biggest takeaway here. The Chinese car startup Nio says that the supply chain disruptions, not the demand, are the biggest problem right now. So although I don't have the part where Li Bin speaks about this, he said that on the sales front, he expects consumer demand for electric cars to persist even if the Chinese government would reduce the subsidies or other policy support for the sector. Whereas, and I said that a couple of times, I will actually see rather the opposite, that there will be more support on the policy side, especially now that the economy is not doing so well because of the lockdowns, and so expect more policy support actually for EVs, like subsidies. But once again, the biggest takeaway here is that Li Bin directly says that there is not a demand issue, but rather the production issue. I made a video the other day just about that for both Tesla and Nio, those supply chain disruptions and the production side are still very challenging, and it's possibly, unfortunately, a lost quarter for them. Let's see how this turns out. Thank you guys for watching. If you want to support this channel going forward, please consider to become a patron. Then you also have the opportunity to join our community where we discuss things daily, or you can also just follow me on my Twitter handle _mm85. Thank you guys for watching. See you in the next one.